Hello, welcome to the Villages, Florida. My name is David. I'm a realtor with Florida Realty Investments, and I can be reached at DavidisinFlorida@gmail.com. Every week, we take a look at what's happening in the real estate market generally and the Villages, Florida specifically. If you are trying to buy a home in the Villages and are trying to find a good deal, or you're trying to sell your home at a fair price at a reasonable period of time, please reach out to me at DavidisinFlorida@gmail.com. Be happy to answer any questions you have or to help you with questions about the Villages itself. Couple of things to note. First, we produce this show every week. Make sure you check today's date so that you're getting the most recent information. Secondly, all of this information is drawn from the MLS, the Multiple Listing Service. It does not include any properties that are listed on the Village's internal listing service, the VLS. For that reason, if you are looking to buy a home in the Villages, you will need to employ two brokers, a VLS broker and an MLS broker. Without both brokers, you will not see all the properties that are for sale. Similarly, if you are selling a home, you need to decide if you're going to list it with the Villages VLS system or with the MLS, the Multiple Listing Service. So, with that out of the way, let's talk about what's happening this week. Many people have accused me of being negative in my discussion about the real estate market, but really all that I'm doing is showing you the facts. And as usual, we start with taking a look at what's happening in the interest rate market because this is the market that sets mortgage rates, specifically the 10-year government bond most closely correlates to the 30-year mortgage rate. And looking at this graph, you can see going back to the first quarter of 2020, which is 3 years ago now, the 10-year government bond yield got down to 0.398, and that equated to a mortgage rate of just under 3%. We're currently at 3.857%, almost 4%, little changed from last week, but you can see that the 10-year government bond yield has risen by approximately 10 times over the last 3 years. Here's another way of looking at it. This is a long-term chart of the 10-year bond yield going back to the late 1970s. And you can see that in 1982 odd, the 10-year bond was yielding 15.48%. But over the next 35 years, the yield on the 10-year bond was reduced from 15.5% to 0.5%, and we're currently hovering just under 4%. But looking at this graph, it certainly appears as if the bottom may be in, and if our federal government can't get its spending in order, it seems likely that we may lose control of interest rates here, and who knows how high they can go. Looking at this graph, I challenge anyone to tell me that they see clear evidence that rates will continue to decrease. Let's take a look at what this actually has meant for the real estate market. This information from the National Association of Realtors going back to 2000 shows us four areas of the country, West, South, Midwest, and Northeast, and what the mean payments are for principal and interest for homeowners. You can see that even though the West is higher than the Midwest, all areas of the country have seen a marked increase in the costs of owning a home since the beginning of last year. Now, here in the Villages, we're obviously immune from a lot of that because a lot of buyers here are buying cash, either because they have cash or because they're selling homes in other parts of the country to move here. But it's unfortunate to note that even cash buyers here often have to sell their houses somewhere else to become cash buyers here. And those buyers are going to need a mortgage. So ultimately, the cost of capital, the price of a mortgage, is going to impact real estate prices around the country, even in the Villages where we think we're immune. And so far, we have been generally. And this is the last thing we're going to look at. This is the debt to income ratio for all home buyers. This information is from ReVenture, and you can see that at a debt to income ratio of 40% for all homeowners, this is the worst affordability level on record, even worse than the 2007 2009 crash. So let's look at the Villages real estate market specifically now. This is the total of all listings currently available for sale in the villages, 308 properties compared to 331 last week. I've started adding the number from a year ago. You can see that a year ago there were 215 homes for sale. Prices this week range from 174,500 to 2.9 million. The total number of listings has been decreasing now for 3 or 4 months. Here we look at all listings broken down by price segment. In the most active price segment, the $300,000 to $500,000 range. This week there are exactly 200 homes for sale. Last week there were 212. The week before that, 203. The week before that, 206. And the week before that, 213. Here we look at the median listing price per square foot for all listings in the villages. We are up this week from 257.89 last week to 259.42 this week. It's not great seeing us remain under 260 a foot. And for comparison, 1 year ago, the median listing price for all listings was $275.50. Here we take a look at how long the median home has been on the market here. 58 days is the median time, up from 54 days last week, and almost twice the 33 days that the median property was on the market at this time last year. 58 days is the longest median time for listings that we've seen over the last year and a half. And it's not surprising, our last look at listings, the number and percentage of listings that have been on the market for 100 days or longer, 88 of the 308 properties, which is 28.57%, have been on the market for 100 days or longer, compared to 26.28% last week. The number of listings that have been on the market for more than 100 days has been climbing relentlessly for the last 2 months or so. Here we look at new listings and homes that went pending over the last 7 days. New listings in blue and pending home sales in orange. This graph gives you a better idea as to how many homes are going pending and how many new listings are appearing every 7-day period. You can get some idea as to the flow of properties onto the market and away from the market. Recently, you can see that the number of new listings has been declining, whereas the number of homes going pending has remained about the same, which is why we're seeing a decrease in inventory. Here we take a closer look at new listings, which this week numbered 24, down from 36 last week, and about the same as the 27 new listings that we saw this week last year. New listings range in price from $254,000 to $825,000. And if you look at this table, you can see the number of properties that were newly listed in each price segment. In the most active price segment, the $300,000 to $500,000 range, there were 14 new listings this week, compared to 25 the week before, 13 the week before that, 13 the week before that, and 15 the week before that. Here we dive into the homes that went pending over the last 7 days. The homes that went pending over the last 7 days went pending at a median 251.52 a square foot, down from the 258.55 that we saw last week, and down quite markedly from the 263.78 that we saw a year ago. It's hard to make any kind of judgment on this graph. It looks like prices keep bouncing around the 255 level here. This graph shows us the median length of time that properties that went pending over the last 7 days were on the market. 33 days, the median time, an improvement from the 43 days that was the median time last week. Still a lot worse than the 13 days that we saw a year ago. The homes that went pending over the last 7 days saw a median price reduction of 4.8% from the original listing price. Big improvement from the 7.1% median price decrease that we saw last week, and also an improvement from the 5.92% decrease that was in effect a year ago. This graph shows us the number of homes that sold and closed over the last 7 days. They numbered 41, a small improvement from the 40 homes that sold in the previous 7 days. A year ago, this number was 26 homes. Prices on the homes that sold over the last 7 days ranged from 206,000 to 1,750,000. This is a closer look at the homes that sold and closed over the last 7 days, broken down by price segment. In the most active segment, the $300,000 to $500,000 range, the last 7 days saw 26 homes close. Previous 7 days saw 22, previous 7 33, previous 7 30, and the 7 days prior to that 18. This is the price realized per square foot on the homes that sold and closed over the last 7 days. A decrease in the price per square foot from 247 a square foot last week to 242 a square foot this week. 1 year ago, this number was $264 a square foot. So prices down about 10% since then. Here we take another look at the properties that sold and closed over the last 7 days to see how long they were on the market before going pending, before ultimately selling. 49 days is the median time, a big increase from the 17 days that was in effect last week, and a huge increase from the 10 days on the market that was the median time a year ago. We are getting closer to the slowest real estate market that we've seen here so far. Here we take a look at what percentage of all listings have reduced their asking price from the original listing price. This week, 57.14% have reduced their asking price compared to 58.31% last week. Even though it's an improvement, it is still quite a bit worse than it was a year ago when it was 53.49%. Here we take a look at what the median decrease for all listings was. As of this week, the median decrease for all listings is a reduction of 4.83% from the original listing price, very slightly worse than the reduction of 4.82% that was in effect last week, and quite a bit worse than the 4.04% rate that was in effect this time last year. So that concludes this week's look at the Villages real estate market. Once again, if you're looking to buy a property in the Villages and would like to know what a good price would be for the property you're looking at, or you're looking to sell your property and would like to maximize your return in a reasonable period of time, please reach out to me at DavidisinFlorida@gmail.com. Be happy to help you or to answer any questions you have about life in the Villages itself. Hope to hear from you. Take care.